if you don't really read into the numbers, you're going to be prey to anything somebody tells you. Now, this here is a chart of the Dow. And what I want to show you is this here. This down here. And if you look at volume as it goes I want to give you the average. A healthy volume for the Dow would be a million shares, which is shown here, 2 million here. And over the last month, because I've been tracking this, look at how low healthy volume is. 1 million. Look at where this is, 90,000. I mean, we are less than 10% in a lot of cases. And look at what happens at the end of the day. You get a spike over 1 million. Spike 1.5. Spike at the end of the day 2.7 million. 2 million. And this is the current day right here. And this is for a 5-day outlook. Now, I've been looking at this for the past month, and this is what's been occurring. At the end of the day, we have a spike in the volume. It's almost as if it's programmed. That's not normal. This rally is fake. And those of you who do not know this will be suckered into believing that everything is kosher, everything is copacetic, when in fact it's not. And it's deceitful, because if you're depending on CNBC for your information, I would only go there for the facts. I would not go there for people's opinions about why things are happening. Gold is at such and such a price. The Dow is at such and such a price. S&P is at this level. That's the only reason I would go to look there. Not to hear what the so-called experts say, because quite frankly, they are, as Jim Rogers referred to them, as a PR company. It's their objective to keep you wanting to buy stocks. If you're not buying stocks, if they give you the impression that everything is not okay, then you're going to get out of stocks. And that's what their whole job is based upon. Just look at the sponsors. These are sponsors who want you to, they are the Charles Schwabs, the Merrill Lynch's. These are the companies who, if you don't invest, they don't make money off of your commissions. I'm sorry, they don't make commissions off of your money, essentially. So you have to be careful. And I also wanted to point out some other things about deceit in data, in economic data. Now, we have, speaking of the Dow, we have leaders, Obama, the Fed, a lot of people touting how things are just, we're recovering, blah, 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 to the blah. Well, here is where I go to look at the money that's coming in or out of the market. Total equity, negative, negative. And this is weekly. This is the estimated flows of long-term mutual funds. So money that's flowing into or out of mutual funds. And if you notice, most people's 401ks are in somebody's fund, which is investing in stocks. Now, over the past month and a half, these numbers have been negative. Negative. And if you go here, total estimated inflows to long-term mutual funds were $6.9 billion for the week. That's here. That's the total, but that's equity plus bonds. So stocks plus bonds. Uh, but it's been an outflow, equity outflow of 1.32 billion for the week. That's that right there. You add all of this up, you're over $11 billion out. And this isn't even including the weeks before then, where it's been nothing but mostly negative. Well, if money's coming out of the stock market, how in the world is it that the stock market is still going up? Again, the invisible is more powerful than the visible. This is what most people don't see. They see the stock market going up, but they don't see this money here going out. And you can be lulled into thinking reality is something that it's not. Okay? Let's go to some other economic data. Here we have the ECRI data, and it basically has its own index that it uses to measure economic productivity, it takes all of its economic indicators and puts them into a number form. And so anything positive, basically it's growing. Negative, it's not growing. Well, right now it's 10.7, negative 10.7. Last week it was negative 10.5. A year ago it was 9%. So we've gone from 9% approximately a year ago to negative 10.7%. And there's been some research done that basically says once this index here hits negative 10, it's 100% of the time has equaled a recession within the next 3 months. Now, does it actually mean that we're going to get a recession in the next 3 months? No, but history suggests that it's been a good indicator, and we probably want to listen to it. Now, that isn't at all what the Obama administration has been saying. That isn't at all what the Fed's been saying. That isn't all what your pundits at CNBC have been saying. And according to them, everything is okay. Well, that's just ridiculous. I could go on, but if you are in stocks, I want to do this one last thing. And here, and anybody can go to this, and like I said, I'm going to have the links below. There's been talk about stocks being cheap. Oh, they're cheap. Well, they're down from where they were, but a price does not indicate whether something is cheap or not. It has to be gauged. It can't be gauged by other prices. You know. So let's give you an example. I have a house that's worth $100,000. Its value is $100,000. You paid $300,000 for it. And now, since the market has tanked, it's dropped by $100,000 in price. So instead of costing $300,000, it now costs $200,000. Well, somebody would say, well, it's cheap. No, it's cheaper. The value is $100,000. You're still $100,000 overpaying. So just because you went down in price does not mean that it's cheap. You're looking for value. Value has a price, but it's not necessarily the price, the market price. So, having said that, I've been hearing that stocks are cheap. Well, I want to know what cheap is. How are they using cheap, that word? And it's basically based on price. Well, I go here to the Wall Street Journal, and anyone can go to this, and this is the Dow. The Dow PE ratio is an indicator for me of how cheap or expensive something is. Now, 15, a PE ratio of 15 and above is high. It is high. A PE ratio between 10 and 15 is pretty average. A below 10 is cheap, and 5 and a PE ratio of 5 is super cheap. So right here, the Dow Industrial is at 14. Well, that's not really cheap. Below 10 is cheap. This is at 14. And if you wanted to round, it's close to 15, which is expensive. If we go down to the PE ratio for NASDAQ, it's 12. Better than the Dow, cheaper than the Dow on a PE ratio basis, but I still would be leery of that. This is probably more, if you're going to invest, I'd like the 12.2 better than the 14.2. And the S&P, which is a better indicator of how stocks overall, because it has 500, it has way more stocks in it than the Dow does, which is just a compilation of 30 stocks, 30 companies. It's at 17. That's expensive. So exactly what's cheap? What's cheap? Nothing I can see. Nothing here is 10 or below. Nothing. None of these PE ratios. And even if you use the dividend yield, low dividend yields suggest high prices. And if you go back to the time during the Great Depression, the yields were up to 6 and above, 6% and above. We are nowhere close to that. The only thing remotely close is the utility stocks. Pretty good investment right now. But even then, I would be, you'd better check, do your homework. So by no means are stocks cheap. They're cheaper, sure, but they're not cheap. And these are just tools that I use to evaluate things. And if you don't know this, unfortunately CNBC is not going to tell you. Unfortunately Bloomberg is not going to tell you this. You have to know where to go to find the correct information for the things that you're trying to evaluate. Because price should not be the only thing. If you're only buying things because they're cheap, that's one of the worst reasons to buy anything at all. Why are you buying it? And what qualifies it as cheap is what you should be trying to figure out. I know I've run a little long here, but I really had to get that out. I haven't done anything in a while, and just wanted to get this out to you. Some things that I thought were ridiculous, and for most Americans, hopefully something useful that they can use to evaluate stock and stock performance and see whether something is cheap or not. I hope this was informative to you, and I am still currently working on, I've actually done the recording for my mother about the health care bill that was passed. I've been quite lazy at editing it, which is the only hold up at this point. Just need to edit it, but nevertheless, I will be trying to get that out as soon as possible, and I will be coming to you more frequently with some things that I just find sheer utter nonsense. Have a good day. God bless.